Have you ever been caught on the wrong side of a weekend gap? Well, I wanted to get this video out really quickly for everybody after this Sunday evening where we've seen huge gaps in the market. You've probably heard of crude oil gapping up. Well, the stock market indices have gapped down due to the volatility with US and Iran. And if you've been caught on the wrong side, or why, you put a stop in, but you got filled lower than where you put the stop in. What is going on there? What is that all about? You've lost more money than you were planning on because you put a stop at a certain level, and on Sunday night the market's gapped down and you get filled. You're out the trade at a lower price. Well, the broker has no obligation to fill you at your stop area. We'll talk about that in a bit more detail in a moment. But let me show you. This is the FTSE 100, okay? And this is where it closed on Friday night. Now, for us at Trading College, we are short the indices because they're red on the Pro Trend system and going down, okay? So the tracks have been red all the way down. Now, we close here at 10,300 on Friday evening, 10 o'clock, okay? And then on Sunday night, we open up for trading at 10 o'clock and it's down at around 10,200. So let's say you put a stop in at 20 points away, and that's a tight stop. We're basically trading 100 points lower. So if you were going to lose 20 points, you now end up losing an extra 80 points on this trade. And look, you're going to ring the broker and they're going to say, well, I'm sorry, but we stopped you out at the next available price, okay? If there's nobody there left to buy it, there's no liquidity, then they will fill you at the next available price, especially spread brokers. And maybe if you're in a funded account, you've breached your account because of the actual gap, and it could be really painful. Now, look. Let's just show you some examples, or an example here. Let's say you're long the FTSE at 10,700, your stop's at 10,600. That's a 100-point stop. The market closes Friday evening. You're happy. You're having a lovely weekend. You've had a great trading week. You put your stop in place. You're long the market. The American Donald Trump, literally, the president of the US comes out with news at the weekend like he does, and then literally the market gaps down. It falls apart. It opens up on Sunday night at 10,200. That's a huge gap, huge slippage, huge. And I'm just saying this just for argument's sake, guys. This is these numbers are not real, but I'm just saying, okay, it's a huge gap down. Now, here's the quote from IG about slippage from their execution policy. Now, slippage occurs when your order is executed at a price that differs from the one you requested, caused by inefficient liquidity at your desired price level. It can work either against you or in your favor. So, I'm long oil, and oil's gapped up over $100, okay? Now, if I put an order in to exit the trade as a profit at 98 and it opens on Sunday at 102, well, I gain that extra 200, 300, 400 points, okay? But it always seems to work against you, doesn't it, guys? It always seems to work where you put that stop in and it gaps down below. Now, a couple of things here that we're doing here at Trading College. We're not holding trades over the weekend unless we have guaranteed stops in and a profit already locked in. Now, even if I've got a profit locked in, I could still get less profit because of the actual slippage. Now, if you go to your broker, let's go to the IG broker here. Let's talk about guaranteed stops because they are great. And everyone says, oh, I don't want to pay any more, okay? Well, guaranteed stops could save you an absolute fortune. But what's a guaranteed stop? Over here on the left-hand side, I've just got the FTSE 100 up ticket here in my spread betting account. Now, it's trading at the moment 10,145. Now, there's my position size at £5 a point. And they put a stop in at £100 here. My maximum loss at £500 would be my loss on this trade. But would it? It's not guaranteed. They will fill you at the next available price, the best price. And look, they're not out there looking at your trades, guys, going, oh, let's fill John an extra 20 points lower. Yep, in the old days, but their policy is they have to give you a fair price. And that is at the next available market price. Because as soon as the price on your deal ticket gets to your stop, it becomes a market order. Now that market order then is at the best available price. And if there is no one there to buy it, then it's going to go to the next available price, which is where the gap comes in. All right, that's where you see that gap. And in volatility times like this, nobody's there buying that market. Nobody wants to buy the market, so there's no one there to buy. So your short trade here is a sell. You want people to buy that from you. Now, if you go to the stop area here, if I just click normal, okay, everything's normal. 9 times out of 10, I'm trading just normally with a stop. But if you want a guaranteed stop, this means they will get you out at that price. So I'll get out for a 500 pound loss here. Okay, 100 points away, but I have to pay something. You don't get anything for free, guys. So my stop premium is triggered, right? So I would have to pay an extra 1.5 points. So what? It's nothing. It's nothing in volatile times. You're only charged, it says here, you're only charged if your stop is triggered. All right, so you put, once the stop is triggered, then you get charged. So it's an insurance policy. Please be aware they'll add the 1.5 premium to your margin. All right, so you're going to pay an extra 1.5 in spread. And that's how spread betting companies make their money, by the spread and overnight charges as well. All right, so guaranteed stops in this volatile market. If you are leaving trades on over the weekend, have a little look at guaranteed stops. If you've got a funded account, take a little look, see if they provide guaranteed stops. I bet the funded account brokers are licking their fingers this Monday morning due to the fact so many people have got long the market on buying the dip and the stock markets have gapped down. Here's the price going for, that's the NASDAQ down 300, Wall Street 800, and the DAX here down 400 points. Okay, so if you've got a stop loss at 20 points away and you're getting filled down below those areas there, much lower, you're going to lose more money. Now, in the old days, with a spread betting account, the broker would suck up the loss. You know, they would literally, let's say it gapped down, they would fill you at the next available price, okay, down here. But let's say it just wipes out your account completely. And let's say it's big money, it wipes out, then the broker will come to you and want that money back, okay, because it's gone beyond what your account size is. Now, they don't do that anymore, guys. They will literally just cut you off as soon as your account reaches zero. Okay, you're out. The machine does the work. You haven't got Johnny sitting up there in the dealing desk on a Sunday night, literally looking at everyone's trades. It's all done electronically now. Once that count goes to zero, then it will be liquidated, no matter, even if the stop's even lower. But you have that protection that you will get literally, well, especially with IG index anyway, you've got that protection that you're not going to lose more. All right. Now, of course, look at the terms and conditions, do your own research on that. But just be aware, like in times like this, holding positions overnight with this war going on, and Donald Trump loves a news announcement at the weekend, it might not be worth it. All right. But if you are going to do it, think about this guaranteed stop, because it's going to save you a lot of money. All right. Okay, guys, good luck with your trading. Stay safe. Give us a like on the video. Share this video to anyone who you feel might need this and understand what gaps are all about at the weekend. I thought I'd do this for you because I know that these volatile times can be very painful as well. All right. Speak to you soon, everyone. Take care.